Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is January 31st, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is up $6.56. That's 3.94%. Closed at 173.22. Post-market, we are down by 71 cents. So let's look at what we have here on the chart. So yesterday, remember, we had a little bit of a pullback. We could not close above 176.73. We came down, but not too much. We still had some gains left. And today, I'm very happy to see that it seems like this support right here is holding. It was holding us on January 26th, and it's holding us today. So we are still into the second part of the channel. The first part of the channel is right here. The second part is right here. So yeah, nice day for Tesla. We are still quite a bit far from 156. So I like to see this, and I cannot help but to see that the top of this candle corresponds to the low of this one here. In fact, we seem to have a little bit of maybe a double resistance kind of thing. This is just interesting to see. Let's go see on the 1 hour chart if we cannot understand something more. So on the 1 hour chart, we had a nice green candle that allowed us on the 1 hour chart to gain back stochastic over 60. And second hour was still pretty strong. And then we basically were sideways. We are having a little bit of difficulty breaking 173.81 on the 1 hour chart. As you can see here, we have one candle right here, second candle, and almost a third candle. And let's say a fourth candle because this one tried to break it but was squished down. So people are not willing to pay higher than this for Tesla yet. It could happen tomorrow. This is just a statement of fact. Let's come back to the daily chart. Let's look at our indicators. So stochastic is rebounding nicely. So went from 82 to 90. You can see stochastic as the force of the stock. It needs to have a force of 60 in order to start moving up a little bit. But the higher the number, the better it is. So right now we are back to 90. That's pretty nice. RSI is at 66 and the overbought zone is at 70. So we like it to be close to 70. In terms of MACD, we had the crossover right here on January the 6th, and we have been going up ever since. The two moving average that are expressed by the green line and the red line are still pretty far apart, and our red line is going to go over zero momentarily. So this is nice, and the MI is still very positive. Nice day for Tesla. It's maintaining itself above 156. So I like it better when a stock, maintains itself a little bit higher than the support that we might decide to sell from. And maybe we are going to stay sideways a little bit. And then at some point, it would be nice if we could bounce on that support and do another move up. We could easily do that. The first major diagonal resistance that we have is this one right here. And this one is going to be at around between 234 and 242 bucks. If things are going well this week with the Fed, we could be going towards 240 something with Tesla. That would be very nice. And then we are going to be asking, are we going to cave into that, or are we going to continue to the second downward resistance? Because one thing that we need to make clear is that Tesla is still in a downtrend. It is in a downtrend. But when a stock is in a downtrend, it sometimes bounce on support and move up a little bit. So this is what we caught right here. We had a move up right here, but this move can be a short move. It could be a fast move. It could be a very quick move, and then it comes back down. We don't know exactly what we are going to get. What we know is that the stock is in a downtrend. The stock is in a downtrend, so any move up that we are catching is a bonus. because when you follow a trend, you are supposed to invest or trade in the direction of the trend. So the major trend is bearish. The other trend that's a little bit steeper is also bearish. And we just ended a very bearish trend right here. And now we are having what can be seen as the pullback from this move down here. Because of this, I would not get married too much to that stock because, as I said, we could be coming back down here very easily at around 240. So we need to keep that in mind when we are investing. We need to be mentally prepared to either put our money there for good or put our money there temporarily. So I would say that we should be thinking about this move that we are in as a temporary investment or trade. Also, because we don't have a stochastic over 60 on the weekly chart. This means that our weekly chart is not bullish at all yet. And in order to get a great move on a specific time frame, we need to have the same bullishness on the above time frame. So if you are investing on the 1 hour chart and you want to go long, it's better to have a bullish, a good stochastic on the daily chart. And if you want to invest on the daily chart for a longer term, then you need to have a good stochastic over 60 on the weekly and so on. So right now, we are playing this one on the daily chart and we don't have the corresponding good chart on the weekly. It's fine. It's fine. We can still get a profit right here, but we just need to be careful that it could be turning around. Let's hope that the turnaround is not the resistance at 176.73, because it would mean that the profit that could have been made on this trade is not very high. But profit is profit. We take it and then we can take our money out, and taking a profit did not make anyone poor. But eventually what we would like is to get outside of this big downward weekly chart, big downward channel, and then come out of it and then even break our previous high at 411 and then go into uncharted territory. That would be fantastic to go there and then go to maybe 1,000 and 2,000 eventually. So right now we are playing catch up, but there's still good money to be made because we step outside of this big downward channel. We step outside of it. There's the spring effect to bring us back a little bit faster up here. Let's take a look briefly at the VIX. The VIX came outside of its downward channel. It came outside of it yesterday, but then VIX is down today. So down 0.52, 2.61%, closed at 1941. So look at this here. We are smack on our support. The support is at 1906 and the low was at 1913. So we are outside of this downward channel. If the VIX had asked me, I would have told it to continue down, but it did not. So now we are going sideways. It seems like we are between 1846 and 21. So a little bit of uncertainty, but still it's quite a low VIX. The VIX is quite low at this level. We should not complain too much. Of course, it would have been better if it kept going down, but at least it's not going up. Let's look at Dow Jones. Nothing much to see here. It's resuming its move up a little bit. S&P 500, after the drop yesterday, now it's getting very close to breaking 40.73 for good. This is SPX. It's nice to see that it's still trying to break its horizontal resistance right here. And then Nasdaq Composite has just broken 11,565 again, like 2 days ago. Let's hope that it's going to hold it and also break 11,674. That would indicate that Nasdaq is now free from the big downward channel and free from the horizontal resistance, so that it can start maybe going higher and higher to eventually reach the all-time high that we got on November 2020. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow and I'm going to tell you à la prochaine.